Hey everybody, it's Pete. Good morning. It is Thursday morning, December 17th, 2020, and FOMC is out of the way. We actually mentioned yesterday the next 3 to 4 days after the FOMC is usually a pretty good follow through off of the consensus from the FOMC. So it looks like we're going to get a pretty good day again today. It's early, but it's also a very good day to be a streaming service. Roku exploding this morning on news of a deal with HBO Max. Excuse me, I have a little bit of a sore throat from doing our live training last night. Hopefully, you caught the training last night. If you didn't, I'll leave a little box here so you can actually click on it. We spent about an hour and a half about teaching the New York method, which is everything that we do here, but in a lot more detail. We talked about order flow. We talked about tape reading. We talked about how to be a actual trader, separating yourself from being a chart reader to being a actual trader who tries to make money. Big difference between being a master chart reader from being a master trader. And you probably know that if you're not achieving everything you want. So pardon my sore throat, but it was really pretty intense last night. We had a lot of fun. So we're going to take a look at some streaming services today. We're going to take a look back at the electric vehicle services. And our buddy Apple actually sold off a little bit yesterday, which was our pick of the day, and kind of reversed and is near that breakout level again from yesterday's high. So we're going to head right over to the charts. I might keep it short today because I'm losing my voice, but we're going to have some good ideas for today. All right, so Roku is interesting. It's been very strong. We've been actively day trading it every day. This last pause was really the best entry spot. Now, what was interesting is we also traded back into a double inside candle, which is another pause. Unfortunately, now with the gap, we're up $21 already, 6.5%, and we're expecting follow through today. That's the big deal. If you remember yesterday, we called out a couple of stocks that were exploding, and after a certain point, they reached what we call a saturation point. And yesterday morning was another one where we called for selling in Baidu. So let me pull that one up just to show you what I mean, because it's a little bit different. So if you see what happened in Baidu yesterday, after a certain amount of buying pressure, stocks reach what are called the saturation point, where a higher opening and a push off the opening actually leads to profit taking. So yesterday we saw that profit taking in Baidu after we had parabolic move to the upside and multiple well-bid candles. We did not see that in Roku. As a matter of fact, Roku paused for a couple of days. So we're actually looking for follow through in Roku today. Now, again, it's up 6.5%. It's a little bit late past the primary entry. So you're gonna have to fine tune your entries a little bit, looking for a new long. But along those lines, earlier in the week, we also called out Fubo. So hopefully you took advantage of yesterday's price action, looking for that to follow through today as well. VRM is an interesting one. If you did not watch yesterday's best stocks picks video, the chart looks like it's a regular low downtrend, just finally breaking, right? But there's a lot more going on under the hood, which is what we pointed out yesterday. If you really want to elevate yourself from chart reader to tape reader, and ultimately somebody who sees their account going up and up and up every month, strongly suggest you watch yesterday's training. But I want to show you just very quickly here. This picture changes dramatically after a downtrend into a consolidation, and volume spikes within that consolidation. That's a textbook definition and picture that you want to print out of what's known as accumulation. So we're really looking forward to start building a position here in VRM, and a pretty reasonably priced stock too, right? As far as some breakouts that we're paying attention to today that we've been watching, GRWG has been in our watch list now, I want to say since mid-October, after it was super strong. Yesterday was a really good day. Optimal entry was 2 days ago. Now is really the third day, so you want to start to work that order, maybe a little bit less on the initial share size. JMIA, also another one. Now, this is an interesting one because we were actually long this stock yesterday afternoon, and it keeps punching up to this level that's having a hard time getting through, which is 40. So look for an entry above 40 is what's in my game plan right now. If it's not above 40, I'm just going to let it go, because I don't like when the stock gets up to a level and fails, gets up to a level and fails. That's where the tape is telling you a story. So you really want to pay attention and force price action to look exactly the way you want it to. Along those same lines, Penn finally punched through again. Really good news with the vaccine. This is a big deal for them, and quite honestly, any other actual casinos. And again, yesterday was the optimal entry coming off of the consolidation candle into all-time highs. So we're looking for follow through there as well. DraftKings had a hard time getting through 52, punched through 52 pretty hard. Now it's at that double top, almost triple top. If you go over here to here to here. So if you didn't enter yesterday at 52, you're a little bit late today, $2.50 late actually, but you can still look to start initiating a position now. Now that we are up very close to that 56, we are going to start to look for DraftKings to make all-time highs. PayPal and Square both had really good days yesterday. Again, punching through to new highs, holding the bid in the language that we use, closing near the highs. So watching those. eBay actually popped up on my radar yesterday. It's 2 days now, not really clean order flow, only the last 2 days, but it's interesting. When you start to see stocks go that well bid and have that much attention during the day, it wants to be on your radar. It should be on your radar. So let's keep an eye on that one. No trade in that one yet. Philip Morris, we actually called out a few days ago after it exploded, and we said, let's let the stock pause. Well, now it's paused. It's actually got a 5-day pause here, and we're looking for follow through in Philip Morris. If we zoom out a little bit out to the monthly chart, you can see where we are. We need to get through 92 to have significant levels. So we're actually pausing, looking for a run to 92, and then ultimately a run, first stop at 100. Next on the list, we have Netflix. Right, I said good day to be a streaming service, right? Netflix exploded a couple of days ago, has now paused for a couple of days, trading near the highs, holding this gap, which that's a big deal. And we have said from the beginning that 560 is our target in Netflix. Not to be undone, we're actually forgotten. We keep going back to the top electric vehicle stocks, and we're looking at NIO. NIO has not quite turned the corner yet, but I do like the fact that now 1, 2, 3, 4, 5, 4 of the last 5 days it's closed above the open, and especially again, this is a part of tape reading. The difference between chart reading and tape reading. Bullish gap, bullish gap. So now it's on our radar to start paying attention to. Right now, it's still a day trade for me because we don't have order flow in higher time frames. The smart money has only been buying for a couple of days. I want to see a little bit more before I sink my teeth in and carry an overnight. So NIO and XPEV are the, excuse me, I can't even type. XPEV are the electric vehicle stocks that I'm looking for now. NIO seems a little bit stronger just based on the most recent price action because of the bullish gaps and the fact that the bullish gaps are holding. So that's going to be interesting to see which ones. But the important part here is we're looking at them as active trades, but because order flow is not obvious longer than a couple of days, that's a trading lesson right there. That means that when you look to the left, you say, how long has smart money been doing something obvious in the stock? If it's only 1 or 2 days, that still means that it's a shorter time frame trade and you should not have bigger risk. You should not anticipate having bigger risk. The easiest trades, the trades that you should be building positions in, are one where the smart money is doing something obvious and you're just looking for a spot to piggyback on top of them, provided it's not too late to get involved. So a little lesson there on order flow and how to manage share size based on how obvious the order flow is. So please click and watch that video from last night. I posted it here. It was a really good event. I think you're going to get a lot of value out of it. We talk about a lot of what we talk about here in a lot more detail, plus a lot more. We talk about why a lot of traders struggle, why 10 trades is the magic number. There's a bunch of really good stuff we cover in there. So have a great day, everybody. Subscribe to the channel. If you have any questions, let me know. Take care.